Good evening, ladies and gentlemen, and welcome to the grand finals of the CFA Institute Research Challenge Sri Lanka for 24-25. The CFA Institute Research Challenge is an annual global competition that provides students across universities with hands-on mentoring and intensive training in financial analysis and professional ethics. Now, the CFA Institute Research Challenge, hosted by CFA Society Sri Lanka, offers the participants of this competition the unique opportunity to learn from leading industry experts and compete with peers from the world's top finance programs. The response for this year has been remarkable, with 33 applications received from undergraduate teams across the island and 29 teams qualifying to participate from the pre-screening rounds, reflecting the growing interest in the competition. Now, before we start off the proceedings, here's a short video to give you a snapshot of what's to come with the Research Challenge.
For over 75 years, CFA Institute has been providing finance education for investment professionals, advancing ethics, market integrity, and professional standards in the industry, which supports better investor outcomes that contribute to economic growth and development. Our role in affecting positive change in an ever-changing world is more important now than ever. Our focus areas will allow us to meet these complex challenges and realise opportunities. We will influence and shape the industry, develop education and lifelong learning, and continue supporting our community. We are fully committed to growing the profession by attracting a diverse next generation of talent, evolving our flagship CFA program to ensure relevancy to prepare us for today and the future, developing research, partnerships, and new member experiences to drive greater industry knowledge and impact, building credibility and trust by setting new industry codes and standards. We lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. We are CFA Institute.
And that, ladies and gentlemen, was a quick snapshot of CFA and its programs. And for anyone interested in joining the program, that's the kind of depth that CFA goes into. Ladies and gentlemen, the CFA Society Sri Lanka is proud to host the 18th edition of the annual local leg of the CFA Institute's Global Research Challenge in Sri Lanka. So once again, to welcome all of you and to speak a few words and to do the honors before we start off the competition, I would like to invite Rashmi Piris Paranavithana, CFA, President, CFA Society, Sri Lanka, to address you all. Ladies and gentlemen, President of the CFA Society of Sri Lanka.
Good evening, everyone. Our chief guest, Professor K.L. Vasantha Kumara, the Vice Chairman of the University Grants Commission, who has not arrived yet, but we are expecting him shortly. Our guest of honor, Mr. Dilshan Veerasekara, the Chairman of the Colombo Stock Exchange. Vindhya Jayasekara, the CEO Designate of the Colombo Stock Exchange. Rasina Abdullah, Society Regional Director of the CFA Institute from the APAC region. The distinguished judging panel of the CFA Institute Research Challenge. Leadership from our selected company, Winforce PLC, faculty and university representatives, graduates and graders and mentors of the CFA Research Challenge, board members from the CFA Society Sri Lanka, our key partners and sponsors who are here today, the CFA Institute Research Challenge Organizing Committee, and other distinguished guests. Once again, truly a pleasure to welcome all of you to the local leg of the CFA Institute Research Challenge Finals, hosted by the CFA Society Sri Lanka. Today, the top 4 teams 2 teams from the University of Kelaniya, a team from University of Sri Jayawardhanapura, and the team from the University of Colombo will be battling it out to select the winners, who will then go on to compete at the sub-regional competition and hopefully advance to the regional and global competition thereafter. With months of research and hard work behind these teams, I'm sure we can feel the palpable tension in the room. The CFA Institute, like he mentioned earlier, is quite a unique competition, as it's the only annual global competition that brings together more than 1,000 universities from about 90 to 95 countries, representing over 6,000 students. Given this global scale, I'm really pleased to see the strong enthusiasm from all universities across the island. And like he mentioned again, we had a record 33 teams registering, with the final 4 teams now competing at the finals today. At the core of this challenge is the opportunity to get hands-on experience on the role of an analyst, where you get to research on a locally listed company. This year we are grateful for the support of Winforce PLC, who came on board to be the selected company for 2024-2025. These teams then get to analyze the industry, explore the financial statements, build a valuation, assess the risks, and then finally for the top 4 teams to present their investment case to a panel of judges representing the industry. This exposure, I'm sure, will be invaluable for these teams to test their academic and theoretical knowledge and apply it in a practical way. I really want to also thank our valued sponsors and partners, particularly the support from our platinum sponsor, the Colombo Stock Exchange, who have always been a champion of this initiative. I'm also grateful for the support provided continuously over the years by our knowledge partner, Acuity Knowledge Partners, for conducting training, covering some of the core areas of the research challenge, and thanks to all our other partners and sponsors for enabling this event. I also want to especially call out the invaluable support provided by our graders and industry mentors, who are all CFA charter holders, for lending their time and expertise, without which we would really not be able to pull off an event of this magnitude. I also want to thank the faculty representatives who have been really supportive and encouraging their students to complete this challenge amidst all their other course commitments. I must also thank the SLRC committee, led by Vijit and also Inisha, Sandunika and the rest of the committee members, for all the planning and effort that has gone into organizing this challenge from the kickoff stage to the finals today. Finally, to all the participants who took part in this competition, I hope you gained something beyond just the technical knowledge. I hope you were able to gain an insight to the experience of what it's like to work on a research team, the value of industry mentorship, and the opportunity to expand your network with those in the industry. Especially to the 4 finalist teams, I hope today you will be able to demonstrate your presentation skills and the ability to articulate an investment thesis. These skills, I'm sure, will hold you in good stead as you join the workforce, and I hope we see many of you joining the capital markets and finance profession over these next few months, and also hopefully earn the CFA designation, which will provide a strong foundation to build a successful career in this industry. So once again, to all the 4 teams, best of luck, and the rest of everyone gathered here today, wish you all a pleasant evening. Thank you.
Thank you very much, Rashmi, President of the CFA Society, Sri Lanka. With that, we move on to introducing our eminent panel of judges. Starting off, we have our first judge for this year's competition, and this is Dr. Buddhika Fernando, Assistant Director at Acuity Knowledge Partners. Buddhika has over 20 years of experience working in investment research, both on the sell side, analyzing and investing in multiple sectors in Asian and European markets, and on the buy side for large global investment funds, pension funds, and hedge funds. She is a CFA charter holder, holds a master's degree from the universities of Lancaster and Birmingham, and obtained her PhD from Keele University, UK. Ladies and gentlemen, a big round of applause to our first judge, Dr. Buddhika Fernando, CFA. Our second judge, Hiran Ambuldenia. Hiran is the founder and managing partner of Ironwood Capital Partners in Sri Lanka and a leading private equity firm with successful investments in Aban's Finance, Barista Coffee Lanka, where you get your favorite coffee from, Elizabeth Moyer School, and The Laundromat. Prior to that, he was a founder of York Street Partners, a leading Sri Lanka-focused investment bank, and also spent 10 years with Goldman Sachs and McKinsey & Company in Europe and in the Middle East. Hiran serves on the boards of the Harvard Business School in South Asia, Aban's PLC, and Aberdeen Holdings, whilst bagging his MBA from the Harvard Business School and a Master's in Engineering from the University of Oxford. Ladies and gentlemen, Hiran Ambuldenia, our second judge for the evening. Our third judge, Dinali Pires, is a CFA charter holder with over 17 years of experience in capital markets and investment advisory. She holds a master's in applied mathematics from Ohio University and first-class honors from the University of Colombo. Most recently, she served as a transaction advisor at USAID Sri Lanka Energy Program, driving renewable energy and energy policy reforms. Her expertise spans across KPMG Sri Lanka and Maldives, where she was an associate director alongside working at NDB Securities, National Asset Management Limited, and Amba Research, specializing in equity research, investment strategies, and risk analysis across global markets. On behalf of CFA Society Sri Lanka, it's an honor and a pleasure to welcome all three of you. Ladies and gentlemen, participants, can we give them a big round of applause? The three individuals you need to impress tonight, alongside the rest, of course, in the room. With that, we are done with putting the faces to our judges' names. We move on to thanking our sponsors, our valued sponsors, without whose support this event would not be possible. Starting off with our platinum sponsor, Colombo Stock Exchange, our gold sponsor, Deloitte Sri Lanka, silver sponsors, Capital Alliance Limited, CLSA Securities, First Capital Holdings PLC, H&B Investment Bank, Lanka Pay, NDB Capital Holdings, Senfin Asset Management, and Userbase Sri Lanka. Our knowledge partner, Equity Knowledge Partners, banking partner, Hatton National Bank PLC, event hospitality partner, Cinnamon Lakeside Colombo, soft skills partner, Advi Academy, candidate resource partner, Alpha Business School, print media partners, Daily FT, Daily Mirror, and the Sunday Times, text messaging partner, Textware, and supporting partner, EduLoan. Before we start off the competition and the presentations, we'd like to introduce you to the 4 finalists and the lineup in the CFA Institute Research Challenge Sri Lanka 2024 and 2025. And these are your 4 teams competing today. We have team number 1, University of Kelaniya, team B, University of Sri Jayawardhanapura, team E, University of Kelaniya once again with team A, and the University of Colombo, team B. Congratulations to all 4 teams who have made it through to the finals. They stood out from the 20 plus teams who participated during this year's edition of the competition based on the research report they did on the subject company of this year's competition, Windforce PLC. Now, there is one beep at 1 minute, one beep with 1 minute remaining rather, and 2 minutes at the end of the total time allocated for the teams. Earlier on, the teams had drawn slots, and the first team who will be presenting their investment case today on Windforce PLC will be the University of Kelaniya, Team B, and the team members representing the university are Ravindu Abekon, Netuni Pereira, Yasas Mallavarachi, Netmi Atukorala, and Sachintha Rajapaksa. Ladies and gentlemen, a big round of applause in welcoming our first team as we give them some time to settle down. And this is how it's going to work. Each team will have 10 minutes to present their investment case, following a 10-minute Q&A session on top of their presentation of 10 minutes. There will be an indication of time at the 9th minute, followed by a final indication with 2 beeps, like I mentioned before, at the end of the 10th minute. A big round of applause, ladies and gentlemen, once again to kickstart with a lot of energy. Let's give them some confidence, energy and motivation to bring in their best game forward. Our first team, University of Caledonia, Team B. All the very best.
Good evening from University of Caledonia, Team B. We issue a buy recommendation for Windforce PLC with a 12-month target price of 30 rupees and 5 cents, reflecting a 17.38% upside based on a sum of the bar DCF valuation backed by relative valuation. Our recommendation is driven by 4 catalysts. Windforce's strategic role in the global energy transition, company's 12.2% revenue CAGR supported by diversified revenue streams, its cost efficiency and the share results of equity investments contributing to a 22% EPS CAGR, and finally its strong positioning as a sustainable stock. Windforce is Sri Lanka's only IPP, executing large-scale wind projects holding a 32% market share in wind power. It is also the only IPP specializing in wind, hydro and solar. With 31 power plants across Sri Lanka, Pakistan, Uganda and Ukraine, its global diversification strengthens its market position. Additionally, its automotive ventures and EPC and O&M services further enhances its competitive edge. The renewable energy industry continues to expand, driven by key demand factors such as climate goals and cost benefits, alongside supply-side enablers like infrastructure investments and regulatory support. In parallel, the automotive industry remains significant, with e-mobility reshaping transportation through advancements in battery technology and evolving consumer preferences.
Moving to our first catalyst, Windforce has expanded beyond Sri Lanka, operating globally. This global reach has positioned it to capitalize on the 2030 renewable energy targets. While Sri Lanka aims for 70% renewable energy, which is currently at 50%, Ukraine aims for 27% and Pakistan for 60%, and Uganda's energy transition program is progressing rapidly. Wind has entered the Maldives and Zanzibar through its EPC segment and has planned expansions into Zambia and Malawi with hydro projects in East Africa. While Zambia aims to increase its capacity by 60%, Malawi aims to increase up to 96%. Though Windforce is currently awaiting resolutions from foreign exchange remittance limitations, its strong cash reserves and its ability to secure low-interest loans supported by an A+ Fitch credit rating, a lower bankruptcy risk compared to industry peers, and its potential access for green financing through its sustainability focus positions it to capitalize on these high-growth markets more efficiently than its competitors.
Moving to our next catalyst, Windforce has built a strong and diversified revenue stream primarily from electricity generation with 56% from wind, 31% from solar and 13% from hydro. Notably, it is the only company in Sri Lanka operating across all 3 renewable energy segments, reinforcing its climate advantage. Beyond electricity, revenue also comes from the automotive and EPC segments, further strengthening its portfolio. This diversification is supported by impressive capacity expansion and the conversion of some associates into subsidiaries, resulting in an overall revenue CAGR of 12.2%. This strong momentum is driven by solar CAGR, which is the highest CAGR, complemented with growth in wind and hydro, along with 4% growth in automotives and 5% from the EPC segments. Capacity expansion remains a major driver, with Windforce projecting a 10.2% effective capacity expansion CAGR from 2021 to 2027. This growth is driven by consistent capital investment, with CapEx accounting for 66% of revenue over the past 4 years, surpassing industry peers.
The levelized cost of energy, a key measure of cost efficiency, has shifted globally in 2023. with technological advancements driving decline in renewable energy costs. Windforce capitalizes on this trend by leveraging cutting-edge technology and partnering with global suppliers, ensuring access to state-of-art equipment. In Sri Lanka, where renewables are cheaper, Windforce gains an edge with lower generation costs and 16% lower installation costs through wind power than the industry. This cost excellence drives operational efficiency, with average 4-year EBIT margin 12% above its peers. Their in-house repair facility, addressing turbine outdated technology, has saved $300,000 USD, reinforcing efficiency. Financially, Windforce shows 22% EPS CAGR over the next 5-year forecasted period and 26% higher net income margin than its competitors. Windforce net margins are primarily supported by its investment in associates and joint ventures, which have a forecasted income CAGR of 17.5%. 8.4% of ROE is expected, mainly driven by yields from past investment, increasing EBIT margins, and increased asset turnover. Despite and below the average industry debt to equity, Windforce's superior interest coverage ensures financial stability. Through cost leadership, operational excellence, and financial strength, Windforce remains standout in renewable energy sector. Moving to our final catalyst, wind emerges as an undervalued stock with strong growth potential, making it an attractive investment opportunity. Its ESG valuation further enhances this appeal with 20% upside driven by its impactful sustainable initiatives and lower ESG risk rating. Our investor sentiment analysis supports this outlook, revealing an impressive score of 85.19%, highlighting strong market confidence in wind growth trajectory. With these factors in play, Windforce stands out as a compelling investment with strong ESG foundation, financial upside, and positive market sentiment.
We forecast our revenue on a plant-by-plant basis, incorporating plant load factor, degradation rate, and the tariff rate across 31 plants. Our buy recommendation is based on the sum of the part DCF valuation and backed by the relative valuation. The combined valuation from supply of electricity and automotive sector gives us 30 rupees and 5 cents, the 17.38% upside. On a positive note, we see a potential upside on a terminal growth based on the anticipated renewable energy bloom and wind's favorable market position. This is expected to drive future share price appreciation beyond our target price, as shown in the sensitivity analysis. To support DCF, we conducted a valuation comparing Windforce with 7 peer companies in Sri Lanka. We have considered EV/EBITDA matrix to give an implied price of 29 rupees and 90 cents with a 17% upside. And also, we conducted a bull and bear case scenario. In our bull case, we determined 29% upside in which the company fully realizes all synergies between the onshore and the offshore segments. Even in the highly unlikely bear case, still there is a 4.5% upside. Finally, we tested our key matrices with the Monte Carlo simulation and weighed WACC, terminal growth, utilization rate, and the exchange rate. 57% of the scenarios support our buy recommendation, yielding a share price of 10% above the current price.
Windforce scored 79.2% on the definitive scorecard, having an A- rating, which shows their commitment towards sustainability in environmental, social, and governance areas. Being the industry's first issuer of carbon emission reduction certificates, the company has successfully saved 408,209 metric tons of carbon emissions, which is equivalent to removing over 85,000 cars from the road for a year. However, we identified that there's potential for further improvement as its figure is lower than that of its peers when considering the company's generation capacity. In social dimension, the company's 5-point CSR initiatives benefit over 32,000 individuals. It aligns its operations with ISO 45001 standard and recorded 0 injuries and fatalities.
Windforce excels in governance with a 92% score from the CFA Institute scorecard, supported by a balanced board, cybersecurity initiatives, safety governance structure, and a zero-tolerance policy. While Wind has taken steps to promote gender inclusion with 6% female employees and an all-female team managing the County Goal project, there's still room for improvement in their board of directors as there's currently only 1 female member. Wind has adopted the latest listing rules and is prepared for the adoption of SLFRs S1 and S2 standards. Also, we conducted an ESG risk rating through the sustainability framework, reflecting a 20% score, reflecting lower risk exposure and risk management effectiveness, attracting sustainability conscious investors.
WindForce faces operational, regulatory, market and global risks, but mitigates them strategically through geographic diversification, strengthening partnerships, ensuring infrastructure resilience, supporting renewable policies and investing in R&D. Ladies and gentlemen, our analysis supports a buy recommendation with a 12-month target price of 30 rupees and 5 cents, offering a 17.38% upside potential. Catch the wind, ride the future.
Thank you very much for a very energetic and comprehensive presentation. It was nice to start off like that. Can you tell me about the changes that have happened in the industry since you wrote this report and now, and how it will impact WindForce?
So WindForce is renewable energy company. So in Sri Lanka, they have 70% renewable energy target from 2030. So when we are writing the report, it's December, now it's February. There are a lot of changes happened during that season. The main one is, last week CEB implemented the water battery system that store excess solar and wind to the wind and solar. From that, government is building the infrastructure to absorb that 70% of renewable energy target with 2030. And other than that, this recent budget, our government has allocated more than 3 billion funds to renewable energy sector. And from global side, and USA dropping out from Paris Agreement, and can you explain about that?
Yes. In terms of the global trend, with USA dropping out of the Paris Agreement and their renewable energy focus, and China being the largest supplier of solar panel inverters, China has an excess supply of solar panel inverters where WindForce can capitalize on it to further reduce their installation costs and capitalize on that opportunity.
And also, on the other hand, the Adani group also drop out from the Sri Lanka, so there's more potential for the WindForce to capture that and capitalize on that.
Thanks. So I have usually a more financial lens on the question. So from a valuation perspective, renewable energy is a more stable and predictable business. So I'd be curious to understand, how have you looked at this project by project? You've got, projections, and usually in projections, they always look better in the future. And so it's climbing up like a hockey stick. And how certain are you about these projections? Have you gone to the project level and understood those, forecasts based on, actual projects in hand?
Yes, I'll take that question, and thank you for the question. So, WindForce have 31 power plants in operations. From that, 13 wind power plants and solar and hydro. So, wind power plants, when projecting their revenues, we consider their tariff rates and their megawatt hours. So they in 2023-24 year, they only had 11 power projects, but now they added Hiruras power plant to their portfolio. When it comes to solar, when forecasting the solar revenue, we considered that all factors, that plant factor and the tariff rates and their capacity. Apart from that, from solar, we calculated that degradation factor affect the solar panels. For hydro sector also, we calculated that revenue same as the wind power plants.
Yeah. And also, to our forecast, we have factored on the project pipeline of WindForce. So they are planning on expanding their project pipeline to 200 megawatts within the next 5 years, which is 2027. Also, that is 110 megawatts out of that is under construction, and 10 megawatts have been already implemented, and there's 80 megawatts they are planning to go with wind projects.
Just one more question on your valuation. You had a weighted average cost of capital of 11.99. If you have a sensitivity on that, did you all look at a sensitivity on that, and what does that do to your recommendation?
Yes. Main reason for this lower WACC is the wind force is mainly operating in power projects. So the power project IRR is around 40 to 13%. The WACC represent the cost of capital. So here, Windforce has that Windforce creating value to their investors with 11.99 WACC. If the WACC is higher in 12.99, yes, there is upside for Windforce when it comes with automotive sector. They have separate automotive sector, so the WACC is a major factor for their share price, but it's not much affected into their share price.
To add on that, the reason for the lower WACC is the cost structure of this company is because this company is 70% debt and 30% debt. So that's the main reason for this lower WACC. And also, this is a low risk company because the company has guaranteed cash flows, and so because of that, the beta is lower than compared to other companies. So that's why this WACC is lower. So we factor that to the valuation. So that's, yeah.
Sorry, last question, I'll pass it on. Why is the ROE so low right now? I mean, that doesn't look like a great company when I see the ROE being so low.
I would like to take that question. There are a few reasons that we identified for the reduction in the ROE. One reason is they have incurred high amount of expenses for selling and distribution expenses. I think we identified that they have incurred the selling and distribution expenses increased by 157% because they have, this is primarily due to the marketing expenses of the Sattva motor vehicles, which was launched recently. They have considered the marketing expenses on that, and apart from that, they have incurred depreciation cost, which was increased by 83% with the aging of their plants. And then we identified they have done dividend payments, which they couldn't pay dividends in 2023 because of the delayed payments from the CFA. So in 2024, they have made those payments, and they have experienced the tax payments and also dividend tax payments as well. So these are the reasons that they have reduced their ROE.
Yeah, so in terms of cost of equity, I just want to be back there. Can you just explain how you arrived at cost of equity? Is there a breakdown or formula? How did we get into 18 point?
Thank you for the question. So the cost of equity is we calculated separately for automotive and supply of electricity segment. So for supply of electricity segment, cost of equity is around 18%. The main reason we forecasted it using CAPM formula. For beta, we considered from the this is in utility sector, since they have guaranteed cash flows and everything, so their risk is very lower than other industries. So beta is 0.63, and risk-free rate, we calculated the risk-free rate, 5-year treasury bond rate over the last 10 years. We got the average and removing the outliers in 2022. When it comes to equity risk premium, we use the 5-year ASPI CAGR for the equity risk premium. And for the automotive sector, yes, the automotive sector, the cost of equity is 22. Since this automotive sector is very new to the Windforce, the risk is high in automotive sector. Because recently they launched the three-wheel conversion segment also, but now it's not working. So therefore the risk is high. So we considered the average industry beta for this automotive sector, and the other factors are same as supply of electricity sector.
So in terms of the electricity side, there are, not only Sri Lanka, there are other countries also coming in. Did you all look at different cost of equities for each valuation, or it was just an average?
We considered only one cost of equity, but when it comes to terminal value, we considered every country their operations.
So in terms of their share for renewable energy, so you have projections that each of these countries have done. In terms of their market share on these segments, is it growing in terms of market share, or is it stagnant? What was the assumption in terms of this?
So actually, Windforce is the largest renewable energy company in Sri Lanka. So it is way more, like it has 147 megawatts of capacity in Sri Lanka, which is way more than its closest competitor, which is 31 megawatts. So currently, Windforce is going for progressions in the industry, and also they are adding capacity, so they are keeping up with the competition, and they have the highest market share. So we assume that as of our knowledge, we think that Windforce is having a higher market share, and it will be growing.
Yes, in addition to that, they are under construction the Siamalando power plant, which is the Sri Lanka's largest renewable solar power plant, 100 megawatt power plant with a battery system. So Windforce is on the way to capitalize on these advantages, and they are still getting that competitive advantage over other peers in Sri Lanka.
And also one more thing to be added. So with the 70% renewable energy target and the long-term expansion plan of Windforce has planned on expanding the capacity through wind power from 267 megawatts to around 1,700 megawatts. And Windforce being the only IPP that is executing large-scale wind projects, Windforce can capture those markets, capture those opportunities with their expertise and experiences.
Great, thank you very much, team. We have the University of Kelaniya Team B. It's quite interesting. I was told by some of the past participants and some of the audience members as well that it's very interesting to see and hear the judges posing some very interesting, challenging questions, which will make the participants really think. So kudos to everyone, and I couldn't help but notice the distinct color chosen for the suits. So it's very interesting to see all the participants in the first team put in so much effort into the competition. It shows attitude, it shows character, it goes beyond just the slides. It goes on to show how serious this is at an undergraduate level. So kudos to the University of Kelaniya Team B, and I hope those suits will come in handy for all events to come in your corporate journey, at least in the next 2 to 3 years, and eventually I guess you will outgrow those. But in all seriousness, we move on to team number 2, following our first team's energetic start. We have the University of Sri Jayawardhanapura with their team E presenting as the second team for the evening. Representing the University of Sri Jayawardhanapura, we have Sachira Pepatutua, Ishini Fonseca, Ravindu Vitarana, Hiruni Samarasekara, and Thevni Fernando.
Powering the future, one gust at a time. Good evening from Team E of University of Sri Jayawardhanapura, and we are here to present our buy recommendation on Windforce PLC with a 12-month target price of LKR 29.75, reflecting a potential upside of 29.35%. Our recommendation is predicated on our 3 thesis points. First, Windforce is on track for a 15.1% revenue CAGR driven by long-term PPAs and accelerated growth. And second, 17.4% EBIT CAGR owing to strategic investments and advanced tech integration. And third, propelling a 15.7% EPS CAGR, delivering exceptional shareholder returns. Wind's revenue has been scaling rapidly, with the total effective revenue growing at a CAGR of 15.1%. 15.1%. This growth is further underpinned by long-term PPAs with 67% of its total installed capacity being under PPAs exceeding 10 years. Beyond organic growth, Windforces has been strategically expanding its project portfolio with the completion of Rividanavi, Surashakti and Kapiti Gollava. Revenue is expected to step up significantly. By FY27, Windforce's total installed capacity is expected to be increased up to 352 megawatt, further solidifying its market position.
Wind energy currently contributes to a higher percentage of its wind energy currently dominates Windforce's revenue, while solar is expected to take the lead by FY27, with solar energy growing at a CAGR of 27.8%. With the solar energy aligned with the industry's trend of the industry's diversification into solar energy. Windforce has expanded its renewable energy portfolio with international operations setting up to 24% of its revenue.
Despite trailing the peer average, we expect Windforce to improve their margins in the coming years. The company's engineer-led in-house project design and maintenance reduces external reliance, while SCADA integrations boost efficiency via real-time monitoring, predictive maintenance, and AI-driven energy forecasting, making upcoming projects more profitable. As the group grows, operational costs are shared across multiple projects, leading to improved cost efficiency. Additionally, the company commands a first-mover advantage in battery energy storage system, a critical technology for addressing peak demand challenges. This integration smooths power output, reduces curtailment, and adds firm capacity. With an annual usable energy of 3,900 megawatt-hours from base, Windforce is poised to generate an additional revenue of LKR 126 million per year. This strategic investment not only improves profitability, but also strengthens grid stability and energy security.
As a result, wind margins are expected to rise from 3 years to a CAGR of minus 2.6% to 17.4% CAGR over the next 3 years, while net profit margins are expected to rise from 18.6% to 36.1%. A key driver behind this growth is strong performance of equity account investees, which are expected to deliver an impressive CAGR of 39.4%. This growth highlights the effectiveness of Windforce's shift toward with partnership, allowing it to leverage synergies and expand its renewable energy portfolio with low financial risk. Given the success of this model, we anticipate that future projects will increase following this direction, reinforcing sustainable, scalable profitability and strengthening Windforce's bottom line.
Windforce is shifting from expansion to cash flow driven growth. Historically, both ROE and ROIC dipped due to upfront project costs and lower asset turnover, but with new capacity online, the efficiency is improving. EPS previously declined at minus 11.5% CAGR is now set to grow at 15.7%, reinforcing long-term shareholder value. At the same time, Windforce is maintaining financial strength while scaling operations. With a healthy forecasted debt-to-equity ratio and asset turnover and interest coverage of 3 times, Windforce ensures financial flexibility for high-yield renewable investments. Cash flow generation is also well-positioned to support this both expansion and dividends. Both FCFF and FCFE are projected to grow at impressive CAGRs, ensuring future dividends are funded internally rather than through excessive debt. By FY27, total dividend payouts are expected to reach LKR 2.1 billion, solidifying Windforce's position as a long-term wealth creator.
Our valuation is solely based on a DCF method, given the high visibility of Windforce's future cash flows. In our base case scenario, we derive a DCF-based target price of LKR 29.75 with potential variation within bull and bear case ranges. Our WACC is 17.14%, which incorporates post-tax cost of debt of 7.76% and a cost of equity of 21.17%. The risk-free rate is derived from Sri Lanka's 10-year treasury bond yield of 11.47%, which serves as the most suitable proxy for a long-term default-free investment in local currency. Our equity risk premium of 15.75% is adjusted for Windforce's weighted average country risk exposure, reflecting macroeconomic conditions in Sri Lanka, Pakistan, Ukraine and Uganda. Our terminal growth rate is 2.5%, which is mainly based on long-term sustainability and projected GDP growth. Based on our assumptions, our valuation strongly supports a buy recommendation for Windforce.
Our sensitivity analysis assesses the impact of key variables including WACC and terminal growth rate. A plus or minus 0.5% change in the terminal growth rate has minimal impact, and even 1% WACC increase does not alter our buy recommendation. With stronger growth expectations driven by upcoming projects and government's renewable energy focus, our buy recommendation is further reinforced. We model 3 scenarios based on plant availability, weather-driven energy generation, and early commencement of projects. For our base case, we expect a modest 3-year revenue CAGR of 10.6% in supply of electricity. For our bull case, we expect strong electricity generation, resulting in a 3-year revenue CAGR of 14.5%. And finally, for our bear case, we anticipate a more conservative 3-year revenue CAGR of 7.6%, but still yielding a 15.7% upside, highlighting Windforce's resilience.
We conducted a multiple-based valuation on Windforce using CSC-listed renewable energy peers, selecting enterprise value to megawatt as the most relevant multiple due to its direct link to operational scale and revenue capacity. By equating our DCF expected price to the RV price, we arrived at an implied EVMW multiple of 207, reflecting a premium over the current 172 multiple. This premium suggests that market may be undervaluing Windforce, especially considering its upcoming projects and growth potential within Sri Lanka's renewable energy industry. With this trajectory, Windforce is well positioned for long-term value creation.
So, how is Windforce tracking along with ESG? Windforce achieved a net zero carbon footprint in FY24 and became Sri Lanka's first ever renewable energy producer to authorize carbon emission reduction certificates. Key initiatives under this segment are the Solar Universe Agrivoltaic project, which integrates renewable energy with agriculture, and the floating solar project in Samnala. Its CSR initiatives, guided by a 5-point strategy, benefited over 32,000 individuals in FY24 with an investment of LKR 32 million. The Kavithi Gollava solar power plant, led by an all-women technical team, highlights Wind's commitments towards resilience. Safety remains a high priority with 0 major fatalities and a 0% total recordable injury rate in FY24. Wind is led by an expert team of members, with 70% of its board members being experts in engineering, finance, and people and culture. Executive remuneration is tied to ESG performance, which ensures responsible governance and accountability.
Despite our confidence recommendation, we identified 2 major risks that we believe worth addressing. First, reliance on single customer, which create dependency. However, regulatory reforms and our bidding are expected to mitigate this risk. Second, geographical risk arises from operation in volatile regions like Sri Lanka, Pakistan, and Ukraine, all rated high risk by Moody's.
In conclusion, we reaffirm Windforce's strong position in delivering long-term sustainable value. The company continues to grow its profitability and revenue streams. With a target price of LKR 29.75 with an upside potential of 29.4%, Windforce remains a solid buy for long-term investors. And with that, the floor is open for questions.
So thank you. So my first question is in terms of the cash flow valuation itself on the forecast. So the forecast that you all have taken is on the electricity side. Is the signed PPAs, or is there any other forecasting that you all have done apart from any committed projects?
We've only taken the projects with power purchase agreements into consideration.
Okay, and in that case, all of it, I guess, ends from 20 years. In terms of your forecast, any particular reason why a finite 20-year period was not taken with all these projects versus the terminal growth?
The common practice is after 20%, the power projects are more likely to be renewed. So therefore, we didn't take the 20-year into consideration. Instead, we went with the 10-year explicit forecasting period, and then perpetuity, then after the perpetuity period.
So in terms of the margins, we saw a drop, but in terms of your peers, you all had two companies that were 100% hydro, whereas wind is mostly on the wind. When you all checked on these margins, did you all again look at another separate numbers where you excluded the hydro by any chance?
In terms of margin, yes, in 24 we have dropped due to higher borrowing cost and everything. And yes, in comparing with the peers, we have lower margins, but given the operational scale of our company, we expect that even a small percentage increase in our company, our gross value or the profit value will be increased by a higher margin, because compared to other peers, our company is catering to all the renewable energy sources and also EV market. So comparing operational environment, our company is much more stronger than the peers.
So on one of your slides, you had the last 3 years of operating profit and net profit as negative, and then the forward as significantly positive. So it was minus 20 to plus 40, almost a plus 38.7. I mean, in a financial sense, that's a massive swing. Can you help shed some light on that? How do you go from minus 20 to plus 38, and what gave you confidence that that will materialize?
Yeah. So this is mainly the CAGR. So net profit has been going as a 3-year CAGR for minus figures, especially when considering 24 we had higher borrowing cost and also the tax increase and everything. But what's driving our valuation is mainly that we expect that these tax exemptions and everything will be going forward, it will be come to a sustainable level, as well as with upcoming projects, especially the 100 megawatt project, it will contribute to our net profit margin as well. And with our technological advancement and the SCADA system, that means our technology advancement, and also with 100 megawatt plant, we are expecting a BESS, that means battery energy storage system. We expect that our margins will improve in the coming years, within 3 years.
So one thing I appreciated in your presentation was a breakdown by project in terms of the capacity coming online. Has this company had a track record of delivering these projects on time?
Yeah, actually they have completed even before the timeline, and if we can show the project pipeline, what they have going on. So these are their project profiles, and these were always completed within the timeline, and actually few of the projects timelines are completed before their designated time. So we believe that they will be on track going forward.
What was, sorry, this is just a very specific question. What was your last close date? You had a last close price that was different to the other teams, so I just want to kind of calibrate myself.
Yeah. You mean the price?
Yeah.
Yeah, it's our submission date, December 30th.
Okay.
Okay.
Okay, so I think that gap might have closed already somewhat, maybe, because December 30th.
Yeah, so currently it's trading around 25, 26, the price, but our buy recommendation is around 29.
Yeah, no, I mean the upside though to that calculation has gone down, I presume, since then.
Yes, being the price 25 at the moment means that WindForce is already leading towards the upside.
Okay, so we've already missed it.
Can you talk me through the liquidity? How are you going to see, given all the expansion that you are planning to do in the company? And then, can you talk me through that?
So, in terms of liquidity, the higher investments, we assign the investments of these projects into 3-year basis. That means every project is funded from 3-year installments. So based on that, we ensure our liquidity.
What will happen to the borrowing costs because of that?
WindForce has a healthy debt-to-equity ratio, and based on that, WindForce has the capacity to borrow more in the coming future.
Also, their power plants are operating as separate entities. So WindForce has a policy of every time fund a plant based on 70 to 30 debt. So that 70 debt will be taken by that subsidiary only, and that cumulative impact on the group holding will be minimal.
You had a slide on that EV per megawatt comparing WindForce to the others. Can you go to that quickly? Sure. Is that calculated based on install capacity or the pipeline capacity as well?
It's, install capacity but based on 12 months. That means at the end of the 25 next year.
Okay, and you said that WindForce has quite a lot of capacity coming online.
Yeah.
Is that similar for the other companies?
No. Nothing like WindForce trajectory. So we have already 100 megawatt that is being constructed and entered to 100 megawatt plant. So compared to others WindForce is growing rapidly. Like they don't have that much capacity, and even the 100 megawatt plus they are doing it with collaboration with Danavi, which is a private limited company. So in terms of publicly listed companies, other peers don't plan on expanding like WindForce.
So if you looked at this beyond a 12-month horizon, what would this chart look like?
Beyond the 12-month horizon, we expect that yes, megawatt value will be going up. That means, but the returns from that investments, that means the EV value will also go up, and we expect this will also going up.
Thank you very much.
Thank you very much to Sri Jayawardhanapura Team E. Were they nervous? Were the judges nervous in asking those questions? Were they stumped? Were the judges stumped? Who knows? Only the faces are to be seen right now. We have the results to come through. Let's see what the judges think. But before that, and since we need a breather after two teams bringing in their fabulous presentations, I'd like to redirect your attention towards the screen for a short video from our platinum sponsor, the Colombo Stock Exchange.
SMEs are unanimously recognized as the backbone of the Sri Lankan economy, as they account for over 75% of the total number of enterprises, provides 45% of national employment, and contributes to 52% of the GDP in Sri Lanka. Technological progress through the expansion of trade and the evolution of global value chains is opening up new growth opportunities for SMEs in Sri Lanka. Globally competitive, dynamic, innovative and sustainable SMEs therefore are the best interest of our nation and pivotal to national economic prosperity. Growing a business and driving a transformation, however, is easier said than done. If you are an SME, you can understand that access to finance is a key constraint to growth, and that access to formal credit can be challenging. The critical challenge of funding also brings about other challenges, including the lack of access to market information, technology, and the lack of quality talent to drive the organization. An increasing number of SMEs, as a result, are considering the pros and cons of accessing versatile methods of financing by looking beyond conventional credit. As a leading source of wealth and value creation for companies across multiple industries in Sri Lanka, the Colombo Stock Exchange constantly strives to drive and transform Sri Lankan businesses while spurring on ideas and ventures that are of a national significance. CSC now offers a new and compelling avenue to drive Sri Lankan SMEs through their next phase of evolution by offering a unique proposition and an opportunity to access a deep pool of international and domestic capital. Our innovative new listing platform for SMEs not only unlocks sources of capital for businesses, but also paves the way for a far-reaching business transformation. Apart from access to capital, our new listing platform will offer SMEs opportunities to build credibility through disclosure of information and balanced governance standards, which would enhance their visibility and attract strategic investors. The new listing platform has the potential to make an all-round impact, bringing a positive change and shaping the stature and longevity of an SME for years to come. SMEs around the country will have at their disposal a range of new capital raising methods such as IPOs and issuing further shares once listed, paving the way for responsible capital raising. Companies listing on this platform will be offered guidance during the listing process by both the CSE and an independent sponsor, and will continue to engage in post-listing support provided through a range of one-on-one meetings, awareness sessions, compliance monitoring reviews, and public consultations. CSE embraces the responsibility of empowering entrepreneurs from all walks of society as they pursue their dreams, shape the future of industries, and transform the Sri Lankan economy. Let us join hands and stand united as we foster the next phase of wealth and value creation among our SMEs, the backbone of the Sri Lankan economy. The Empower Board of the Colombo Stock Exchange, making the capital market work for Sri Lankan SMEs.
Ladies and gentlemen, I hope you're all set for team number 3. But before that, we also have on board today our internship partners who will be providing internships to the finalists of this year's challenge. Equity Knowledge Partners, Capital Alliance Limited, the CSE, First Capital, John Keel Stockbrokers, KPMG, Sunshine Holdings, and Userbase. Ladies and gentlemen, a big round of applause to our internship partners joining the program and the broader CFA program here this evening. With that, we move on to team number 3. We have a promising team from the University of Kelaniya, Team A, comprising of Salama Sanun, Kings Karon, Leonie Hapuarachi, Jitmi Gamage, and Nifal Munheim. Ladies and gentlemen, the Team A from the University of Kelaniya.
Good evening, everyone. The future cannot be built on resources that are running out. The world is transitioning towards renewable energy, and Sri Lanka has set targets to become cleaner and greener. We recommend a buy on Windforce with a target price of 31.1 rupees, reflecting a 21% upside through a DCF valuation. We believe Windforce is a premium counter, and our bullish sentiment is supported by Windforce's profitability surge powered by planned expansion, its competitive edge amplified by market change, diversification and technology, and its front-runner position to capitalize on growing sustainability trends. The largest independent power producer in Sri Lanka, Windforce, stands out with a diverse portfolio that has allowed it to scale beyond all sector peers, boasting an installed capacity greater than their combined total. This positions it for further market dominance while growing internationally.
Diving into our investment thesis, Sri Lanka's energy demand is set to rise by 207% by 2047, with a national goal of achieving 70% renewable energy by 2030, aligning with similar targets in other operating markets. Windforce is set to capitalize on this shift, expanding the installed capacity to 505 megawatts, growing at a 19% CAGR, 2 times faster than its peers. This in turn drives revenue growth in all segments at a strong CAGR of 25%, leading EPS to triple and reach 4.6 per share by 2029. Beyond that, revenue and EPS begin to stabilize till 2037. Our analysis shows a rise in EBIT and MP margins, mainly due to the low-cost technology and strategic joint ventures. Based on their dividend capacity and policy, we foresee a 40% payout till 2029, rising to 80% thereafter, maximizing shareholders' value.
Moving on to our second thesis, Windforce isn't just a leader in the utility sector, it's also Sri Lanka's top private provider of wind energy across all conglomerates, giving it an industry stronghold. Sri Lanka's energy reform expects to end the CB's monopoly by 2026, creating a more efficient grid. The recent power outage highlights the need for a smart grid as it increases solar efficiency while reducing dependence on fossil fuels. Windforce is set to gain the most with its 100 megawatt solar park in Siambalandua, the only local plant with battery storage, earning an average of 17,900 rupees per gigawatt hour
outpacing the industry and strengthening its competitive edge. AI, predictive analytics and real-time monitoring are expected to boost operational efficiency from 83% to 87% by 2029, double its peers. On top of that, craneless wind tech and partnerships with top turbine suppliers have made Windforce the lowest cost installer in the industry, 20% less than peers. Its diversified power plant mix ensures maximization of natural resources while maintaining steady and peak output year-round, turning a significant industry threat of climate dependence into an opportunity. Upon interviewing 11 experts ranging from government officials, renewable energy employees to climate specialists, results were clear. Windforce is in a league of its own. Its strength comes down to three key factors. First, no local competitor can match its capital strength and expertise in wind energy. Second, its in-house team drives seamless expansion. And third, it plays an irreplaceable role in Sri Lanka's energy future, highlighting its edge over peers.
Windforce's ESG excellence is aligned with growing investor sentiment in sustainability. Our survey revealed that 62% of respondents prefer renewable energy sector in leading sustainable industries. Our analysis of ESG scores found that Windforce's strong ESG performance make it stand out as the top choice for the sustainable focused investors. The upcoming ESG 20 index evaluates ESG excellence, market size, liquidity and profitability, positioning Windforce as a front runner for index inclusion. COP29 highlights the need of $300 billion in funding from developed countries to promote sustainability in developing nations. Windforce's potential to be included in ESG 20 index boosts its appeal for FDIs, increase investor confidence and converging its stock price towards its fair value. Further, high ESG focused stocks remain defensible in economic downturn, reinforcing Windforce as the top sustainable investment.
To take advantage of the lower borrowing cost, Windforce plans to achieve a 70% of its debt to capital structure for its expansion. Currently it's at 40%, way below than the industry's average, highlighting strong debt capacity. Although the debt comes with credit risk, Windforce's financial position is very strong. The interest coverage ratio increased from 3 times to 7.2 times by 2037, ensuring the debt serviceability. And also the EZ score shows low bankruptcy risk, highlighting the leverage is effectively used for the growth and returns. Windforce has outperformed with peers in return metrics, with ROIC reaching 12% through operational efficiencies, strategic investments and advanced technology. Our loop analysis shows ROE growth with modest leverage till 2029, and on post-2030 the leverage drops from 1.6 to 1.2, ensuring the sustainable growth. The free cash flow is negative in the early years due to the heavy capex, but later on it grows at a CAGR of 21%. The free cash flow conversion rate is stabilized between 75 to 65%, ensuring to maximize the returns for the shareholders.
Our buy recommendation is supported by an upside of 21%. The target price of 31.1 rupees has been calculated using the DCF approach, as it effectively captures the company's planned expansion. A relative valuation was conducted to reinforce our findings. We forecasted an extensive 13-year period to fully capture the effects of Windforce's expansion. This timeline highlights the company's path to maturity, given that the power generation segment is in the growth stage and the EV segment is in its introductory stage. Projections were done segment by segment, allowing us to incorporate unique variables such as tariff rates, plant load factor and capacity. Significant attention was given to new plant additions and disposal of existing projects. We also factored in maintenance and expansionary capex due to the capital intensiveness of the business. The free cash flows were discounted using a WACC of 11.4%, derived from a 20.3% cost of equity and a 10.1% cost of debt. Beyond that, a 3% terminal growth rate was applied, consistent with IMF projections for GDP growth, inflation, and local demand for renewable energy. Given the rapid macroeconomic recovery, we anticipate Windforce's share price to exceed our projections, as seen in our sensitivity analysis.
As a final robustness check,
we conduct a Monte Carlo simulation, which further reinforced our recommendation by showing that 70% of all outcome yielded 15% of upside. We conducted a scenario analysis using sets of assumptions. Primarily, the renewal of non-renewal of the PPA alongside 3 other key assumptions. The analysis results show 54% upside in bull case and a 7% upside in bear case. We perform a relative valuation to compare the wind force with similar companies using 4 multiples. EV to gigawatt reflecting the market expectation, EV to EBITDA indicating the operational efficiency, price to earnings highlighting the profitability, and finally price to book value reflecting the company's asset value. By giving equal weight to these multiples, we calculated a target price of 29.4 rupees reflecting 14% of upside.
We analyzed Windforce's multidimensional ESG approach through our own unique scorecard, which determined Windforce standouts among its peers in all categories. In the environmental aspect, Windforce focuses on sustainable waste management and innovation. According to industry experts, CO2 emission saved is equivalent to planting 6.1 million trees. In social aspect, Windforce faces a gender imbalance in its male-dominated sector, but promotes diversity through operating Sri Lanka's first 100% female-operated solar plant in Kapitigolau. Windforce excels in governance, scoring highly based on Code of Best Practices in 2023 and CSA listing rules.
We identified 3 major downside risks: the risk arising at the end of the PPA, climate dependence, and the currency risk. However, with the reinvestment of further capex and new technology, the diversified portfolio, and the implementation of hedging strategies, we believe these risks will be mitigated. Strong wins, stronger wins. Therefore, this is the time to invest in Windforce. Thank you very much for your time. We now welcome your questions.
Thank you very much for that. So a few questions. Firstly, I think you started off by talking about the dominance of Windforce and also the fact that Sri Lanka is growing its energy sector quite rapidly. We saw recently it's possible for new entrants to come in a large way, and you mentioned that their capital strength, or their capital was one of their strengths. But again, if a foreign entrant comes in, does that still remain so? And what's your view?
I think you're referring to the recent Adani exit. So they weren't able to stay for long because they weren't able to accept the tariffs offered by the Ceylon Electricity Board. So Windforce has been in the business for over 10 years, and they've achieved a certain economies of scale by operating for such a long period of time, and also their diversified power plant mix has spanned ahead of all their peers. So they have a very diverse and large installed capacity relative to anyone in Sri Lanka. So this is what supports its economies of scale. So someone like Adani can't accept a tariff of less than 5 rupees, but Windforce is able to bid and competitively raise its position amongst its peers and accept lower tariffs, which is why Windforce has secured such a large number of projects under its portfolio. So that's a threat that even Adani cannot bear because they need a tariff higher than 5. They were demanding over 6 rupees. Windforce is able to build, break even and accept something like 4, 4.2, 4.3. So that's because of the economies of scale.
I saw you mention the automotive sector. I honestly find it confusing when a company tries to do too many things. Why does it make sense for this company to be in the automotive sector?
The automotive sector, because it's a rising segment, and the demand is projected to increase rapidly in the coming years. But their vision is to reduce the carbon footprint and promote a greener and more sustainable life. So this is perfectly in line with their vision and mission. So this shows to the society that the company isn't just focused on generating electricity, they are trying every possible stream to reduce the carbon footprint. So it's perfectly in line with their vision and mission, and it is a positive externality to the company which can attract foreign direct investments and create a really good reputation around the company.
Okay, one more question, actually 2 more questions, sorry. In FY28, you had a massive spike in your profitability, which also showed up in your debt coverage analysis. Can you explain that in a little bit more detail?
So the company's debt capacity is currently stands at 40%, but they're planning to increase it up to 70% because the company has massive expansions undergoing and they're planning to finance them through the low borrowing cost through via debt. Therefore, currently the interest coverage ratio stands at 3, and therefore.
So I was referring to, you see, the spike in 27 to 28, that's there in your EBIT chart as well. So why is that jump there between 27 and 28?
Yeah, this is because of mainly the expansion is going to end at 2029. So at the end of 2029, they are directly generate their revenue, which is increasing their EBIT. So ultimately, their loans also is going to end because Winforce usually take 10-year bonds. So once after 28, 29, their interest payments also lead to low at a low level. So what happen is our interest coverage is going to increase ultimately because of the revenue increment, and interest payments are going to low.
Last question, can you talk a little bit about this company's US dollar exposure?
So the company has joint ventures in Uganda, Ukraine, Pakistan. They're exploring further in the East African side. So those projects are dollar pegged. So they earn around 32% of their bottom line from these strategic joint ventures, which is a benefit and a risk in a certain way because the rupee appreciates, depreciates, so it depends. And also the company sources its raw materials from top turbine suppliers who are located overseas. So when they're bringing in their raw materials, there's a bit of a risk if the currency appreciates because then they're paying more. But with the recent devaluation of the rupee, the company actually sought after lots of profits from their power plants overseas. And recently they converted a few of their plants from associates to subsidiaries, which increased their top line and bottom line. So this is their current exposure to the USD, but they're exploring further options in East Africa, Malawi and Zambia, and also Siambalandu is a 100 megawatt power plant. So it is also a US pegged tariff system, even though it's in Sri Lanka. Since the capacity is large, it's dollar pegged, which is a way of reducing the risk of the company and ensuring a steady revenue.
So thanks. I think Dilan is going to have some questions about your work.
So before that, I just want, in terms of risks, you all listed a few risks. What is the largest risk that you see in this company?
When it comes to the risk, we believe that the risk arising at the end of the PPA is the largest risk that the company faces because this is common to the industry. So anyway, we believe that the company will face either renewal or the non-renewal of the PPA at the end of the 20 years. So we believe the company will mitigate this by relieving the PPA with the reinvestment of further capex and new technology in order to keep the plant fully functional. Therefore, we have addressed this issue in our 3 scenario analysis. According to our base case and bear case scenario, we assume that the company is not going to renew the PPA, and according to our bull case scenario, we believe that company will renew the PPA with the investment of further capex.
And in terms of this renewable and non-renewable of PPA, how did you all go about this valuation? You all removed, just explain how you all did the projections for renewable and how you all did the projections for non-renewable.
Our base case assumptions were that the PPAs won't get renewed. So that's why we forecasted a period of 13 years because we wanted to fully capture this risk when we are recommending a target price to our investors. So the 13-year period is the average number of years that based on our analysis, that's the average number of years it takes for all of their projects PPAs to end, and by that time we assume that the PPAs won't be renewed. So in our bull case, however, we assume that the PPAs will get renewed because they are able to invest in technology and maintain their plants, and when the CEB comes for inspections, they will find it favorable to renew it. So in our primary valuation, our DCF base case, we have considered a non-renewal to capture that risk to our investors, and that's why we forecasted an extensive 13-year period.
And this 13-year period didn't involve a terminal value or anything?
It did. So 13-year period, and then we put a terminal period thereafter.
Even for the electricity,
yes.
The whole thing?
Yes.
Okay. And then in terms of, let's get into the cost of equity, cost of debt. that was something that you all took for the entire all streams, for electricity as well as the automotive segment?
Yes.
Okay, and in terms of your projections, was it a sum of the parts or altogether?
We did DCF as our primary valuation. However, we projected segment by segment, so solar, wind, hydro, and the automotive segment separately, and we combine all of it and then put the revenue, because the costs are common to all, because even in their statements, the costs are given as a common cost for all, like it's segregated into distribution administration, but they haven't specified for the automotive segment and for wind, for solar and for hydro. So it was very hard to go about that, which is why we ultimately decided to go with the DCF.
You had a slide which said that you're projecting growth until 29 alone. You have a slide which shows that you are projecting for growth until FY29, and after that it's maintenance. So are you not expecting any further growth? Why was that?
The reason behind that was because the company's current pipeline expansion ends there. So we aren't sure of whether they will be expanding further or whether they will stop their expansion. However, Windforce has a reputation for constant upkeep, constant innovation, exploring further new territories overseas. But this was based on the information we had as at the valuation date. So that's why we wanted to have a conservative assumption, because other than that we can't keep an allowance for expansionary capex yearly without knowing their plans, because it's not consistent from historics. It's suddenly they have like a 100 megawatt boom and then the next year it's a 20 megawatt expansion. So it was very hard to go about that. That's why we applied our assumptions conservatively.
So now I see that you expanded into a and bull case thing, which makes a lot more sense.
Yes.
Thank you.
Sorry, one more question. You had a slide on this efficiencies moving from 82 to or 83 to 89%. Can you kind of break that down a little bit?
Yeah. Should I take yeah. So yes, efficiency, it depends on a lot of factors such as plant load factor, technology, and all the weather is a major player for efficiency. So the reason that Windforce's efficiency, it currently stands at 83% based on our analysis, and we are foreseeing it to go to 87% because they have adapted new technologies even this year. So that constant technological upkeep and the way that they are able to navigate the uncertainties of the climate change. So they have these predictive systems, and SCADA, even the University of Moratuwa has a system that predicts the solar levels, and then their panels generate according to that. So Windforce is the only company in Sri Lanka actually who has integrated that system into their plants. So all of this has made them to become technologically well versed, and that's sort of like a barricade around the company. That's one of our main defensiveness for their competitive edge, is their technology. So based on this, we foresee that their efficiency goes from 83 to 87% by 2029, and then it doesn't stop there. We believe there will be marginal rises above that till 2037, which is the end of our forecast.
Ladies and gentlemen, we have the University of Kelaniya Team A. That was your third team for the evening with some impressive answers. Certainly a lot of exuberating confidence coming through. They presented a bear case and a bull case. Was their case a bull or a bear? Let's find out. Let's wait and see what the judges have to say. So with that, we move on to our fourth team. This time from the University of Colombo, Team B, comprised of Chanaka Dinuwan Basnayaka, Delrin Ranjan, Savindika Patirana, Dilsha Basnayaka, and Sanjana Hirushi Piris. Ladies and gentlemen, your fourth and final team for the evening, the University of Colombo, Team B.
Good evening from University of Colombo. We are initiating our investment coverage on Windforce PLC, Sri Lanka's largest renewable energy leader. We issue buy recommendation with a 12-month target price of LKR 30 and 70 cents, indicating an upside potential of 21% based on DCF and relative valuation methodologies. Currently trading at LKR 25 and 40 cents, we believe that current shares are undervalued. However, supported industry tailwinds coupled with its leadership, diversified and innovative strategies position the company for sustained growth and resilience. Wind, established in 2010, has grown to become Sri Lanka's largest renewable energy company, leading its way in wind, solar and hydropower solutions. Wind is pursuing horizontal integration by expanding into EV market, EPC services and management fees while extending its geographical presence. Let's move into industry overview.
In Sri Lanka, the energy sector is mainly controlled by CEB while IPPs hold 24%. Currently, 58% of the country's energy comes from the renewable. Wind has identified emerging market for renewable investment, including Pakistan, Uganda and Ukraine. Future goal shows that these countries have potential to expand their capacities further. We interviewed wind peers, CEB and industry experts to understand wind industry positioning. Now let's see key catalysts for wind success, starting with our first value catalyst.
We identified wind's strong positioning to benefit from supportive energy policies by driving significant growth. Sri Lankan government targets 70% renewable electricity by 2030 with around 6,800 megawatts primarily from wind and solar. This creates a supply gap of 49%, facilitating around 480 megawatts to be added annually. However, due to CB's strict capex constraint, a significant opportunity arises to the private sector players to bridge this gap. Currently, IPPs are expected to contribute up to 300 megawatts as committed plants, from which wind contributes 37%. This process will be further accelerated due to a potential increase in electricity demand by 5% annually. Now let's look at how wind's competitive edge translate these policy tailwinds into the success.
As our second value catalyst, we identify wind's proven track record, management expertise and economies of scale creating market leadership, translating policy tailwind into the successful execution. Over the past years, wind has consistently demonstrated in its strong track record by securing power purchase agreement at remarkable rate, maintaining higher capex to revenue ratio and also maintaining debt to capital ratio nearly 1.6 times lower than its peers. Additionally, wind consistently deliver higher EBITDA margin compared to the industry peers through its excellence further. These factors have supported to wind attract strong partnership both locally and internationally. Wind further achieve operational excellence driven by management expertise, reflecting timely project delivery and an impressive 97% plant utilization. Wind also lead the industry in economies of scale, operating nearly 6 times larger than its peers. This advantage enables highly competitive bidding prices. Now let's move on to our third value catalyst.
Wind's diversified and forward strategy create an unshakable hedge by improving resilience. Wind has built a balanced energy portfolio which effectively reduces the over-reliance on a single source. Further, we lead the wind segment with a first mover advantage, leveraging its diversified portfolio to build a stable foundation. Additionally, wind has diversified into the horizontal integration, particularly in electric vehicle sector, which is expected to grow at 7% CAGR from 2025 to 2029. Further, wind has strategically expanded into the international markets, potentially in African region where renewable energy demand is expected to grow, mitigating the market risk compared to its peers. Now let's look at financial analysis.
Wind is on a growth revenue, expecting to increase a CAGR of 15.6%. The company has a solid foundation with reliable income from long-term PPAs and additional revenue from new power plants. Non-core income is also expected to boost revenue further. This growth is further accelerated by strategic cost management initiatives, including turbine replacements, up to 30% electricity tariff cuts, and controlled expenses, which will boost profitability and position wind for scalable growth.
Wind stands out with a net profit margin higher than industry peers driven by superior cost management.
Looking at return on equity, Wind's solid profitability, efficient asset utilization, and balanced leverage are expected to drive ROE to 10% by FY27E. From company maintain its leverage and debt to asset ratio at a lower level than its peers, ensuring it can withstand industry challenges while pursuing growth opportunities. Wind also excels in liquidity management, with the debt service coverage ratio consistently outperforming its peers, highlighting a strong ability to meet debt obligation. From FY25A onward, the company's free cash flow is set to grow, driven by new renewable energy plants and a more normalized cash operation cycle. Expansion into EPC services and the EV segment will further strengthen cash flow, ensuring a robust financial position to meet short-term obligation. EPS and DPS will grow up steadily, driven by operational efficiency and expansion. Now, let's discuss valuation.
We derived a target price of LKR 30 and 70 cents, indicating an upside of 21%. This is backed by both DCF and relative valuation methodologies. Under DCF, we arrived at a target price of LKR 30 and 60 cents by taking weighted average cost of capital of 9.9% and a beta of 0.8, reflecting the renewable energy sector's low volatility. Further, by analyzing plant-specific revenue potential, we can also observe an uptrend in the free cash flow to firm, driven by revenue growth and capex alterations. Our sensitivity analysis also confirms the strength of our buy recommendation, even after making changes to crucial factors, having identified that plant load factor is the most sensitive variable to our DCF target price. Moving on to scenario analysis, the bull case gives us an upside of 21.9%, whereas the bear case gives us a downside of 21.6%. Under relative valuation, we identified an industry-specific multiple of EV to total installed capacity, and based on this multiple, we identified that wind is currently trading at a discount of 118 times compared to its peers. Why? Due to plant breakdowns and operational inefficiencies. However, we believe the stock to trade at a higher multiple of 197 times in FY26E, driven by strong growth prospects and profitability as discussed in our financial analysis. The next multiple, EV to EBITDA, gives us a target price of LKR 30 and 80 cents at a trading multiple of 8.5 times, which is above the peers, proving Wind's market leadership. So based on these valuation methodologies, we reaffirm the strength of our buy recommendation. With that, let's take a closer look at the ESG aspect of Wind. Our calculation on Wind and its peers' ESG score shows that strong 78% outperforming competitors. Wind shows leadership in environmental sustainability, achieving a 42% reduction in energy consumption in FY24, adopting electric vehicles, and pioneering Sri Lanka's first agrivoltaic plant. On the social front, it emphasizes on workforce development, gender diversity, and other factors. In governance, Wind has a well-balanced board with a diverse expertise and strong committees. However, addressing the gender imbalance could improve inclusivity and accountability. Now, let's take a look at this aspect of Wind.
We identify both upside and downside risk. As upside risk, the growing EV demand will increase EV sales and charging stations. Additionally, power wheeling enables direct sales. As a downside risk, operational inefficiencies, the 100 megawatts Vividan project on hold, and CEV dependency, etc. However, Wind actively addresses these challenges with strategic initiatives to ensure the market leadership. So, ladies and gentlemen, are you ready to invest in Windforce? With steady growth, profitability, and market leadership, we reassure our buy recommendation 12-month target price of LKR 30 and 70 cents, indicating an upside potential of 21%. Let's shape a greener tomorrow together. Thank you.
Ready for questions? Yes, thank you for a good presentation. I am very surprised by the fact that you chose as your upside risk EV market growth. Why is that your biggest upside risk?
because we have revenue-wise, we have core revenue and non-core revenue. So in non-core revenue, EV market is a major component of the EV non-core revenue. So we expect EV market will grow in upcoming years, since this is a industry trend as a foreign countries, and the international market also going to EV market. So we believe that EV market has a significant improvement in the upcoming years. So
how is that reflected in your numbers forecasted?
Or more specifically, how much of your forecast revenues are coming from EV?
Okay, so we identified EV as a segment which is still growing. So when it comes to EV, we actually maintained a highly conservative approach, and as a result, we have mainly forecasted we gave a huge weightage to their core business revenue, that is wind, solar, and hydro. However, when it comes to EV market growth, we see that sustainability and environmental sustainability is becoming a great deal currently, and with actually the import ban being lifted currently, we expect the demand to rise, leading to higher EV vehicle demand in the upcoming years. And even when we looked at it on an industry trend, the EV market is expected to grow at a 7% CAGR, and we believe that this trend will further continue, helping the company to actually generate returns as a result of venturing into this segment through their non-cooperation.
You started off the presentation by talking about the size of Windforce and being the dominant player, but you also commented that there's 480 megawatts of capacity that's required every year to grow. You already know what Windforce is going to do. Where is the rest going to come from, and how does that become a competitive threat?
Windforce created a plan to meet these tailwinds requirements. They expanded their capacity from 245 megawatts to 425 megawatts by FY27. So to meet these to meet the fund requirement for that, they mainly focus on 70 to 30 debt equity capital structure to fund this project, as well as they are looking for a strategic partnerships to collaborate with them and expand their capacity. So when it comes to the threat, with the policy tailwinds, this substitute threat from the substitutes is fossil fuels will be reduced with this positive policy tailwinds coming into the industry. So with that, we believe the substitute threat is less, but with the policy tailwinds, the competitors might be expand further. But even though they expand further, Wind has the most unique selling propositions compared to the peers. So they have the first move advantage in wind segment, so they can still have the potential to sustain in the competitive market.
And to add to that, to answer the question, so 480 megawatts. So from that, actually, wind is already contributing 110, and we have identified that CB has strict capex constraint. And as a result of CB's strict capex constraint, coupled with wind's market leadership, they are capable of getting into strategic collaborations and partnerships. As a result, they will be able to, as a result of them being the market leader, they will be able to promote this increased demand. They will be able to supply towards this increased demand, towards this increased capacity requirement that needs to be done in the upcoming next few years. So that is one main reason as to how wind will be able to meet this demand and meet this demand by basically coming up with the 110, starting off as 110 megawatts initially, and because of CB's capex constraint and their capacity to engage in strategic partnership, they will have the ability to be the market leader and fulfill this requirement.
I think on one of your slides, which you talked about margins, can you go to the margin slide? Did I understand correctly that you were forecasting declining margins? Slide 21, I believe, yeah. So today you have margins which are projected in FY25 to be slightly down, 26 to be a little bit further down, and recovering a bit in 27. But that for me generally is not a good company. Why is this, in your view, okay?
In 2024 and 25 first quarter, they invested in segment like Vividania project 100 megawatt. So because of that, their profit margin goes down, and also they previous years they invested into FY24 Kabitigola project and also one Ukraine solar power plant due to energy countries, and as well as they started doing in FY23 Hidras project. So those are starting generating revenue from time to time from FY25, FY26, 27, and also the wind is established in FY2010. So because of so mainly wind revenue income is wind segment. In wind segment there are several plant breakdowns happening, and wind hope to wind plan to replace their wind turbines in that old plants. Approximately based on our analysis, there are 4 plants that will reach the useful life of that wind turbine. So they hope to replace that wind turbine. So because of that, some we can see the margins are going down. But after replacing, their cost efficiency will go up, and also their revenue generation will go up because of that, and also their non-core revenue, like basically EPC services, because governance now target is 70% renewable energy. Because of that, our company, Windforce company, demand will increase, and also not only Windforce, other company, other peers demand also increase. Based on our interviews, we confirmed that with competitors. They told their demand will increase, but they haven't any knowledge about other segments like wind. Wind has a knowledge expertise, experienced teams, and so on. So within demand increase, they have the potential to provide EPC services and management and so on. So that will increase their non-core revenue. So we forecast that their revenue go by in the near future. Margins improve.
So I want to go back to that slide that you all discussed about DCF base case target price. You all had a bull and a bear scenario. This one, yeah. Just to understand. So in terms of weather condition, when you say negative 5% to plus 5%, what are the line items that you all actually change to see these numbers changing? That's the
in terms of the weather conditions, it will mainly affect for the hydropower plants and the wind power plants, because
so is it plant factors or revenue? What exactly did you all change to see these numbers changing?
Basically, the revenue factor is the main consideration, because when seasonal effect of the weather condition changes, it will directly affect for the supply of electricity. That will reduce the...
So just, I don't know, past time, but so the last one, that is on the revenue, or is it anything else? How does it differ?
Is it the grid stability?
Yeah.
Yeah, that's also the impact from the grid stability, also impact from the cost side and the revenue side as well.
Thank you.
Ladies and gentlemen, that was your fourth and final team, University of Colombo Team B. Since we have now concluded all four teams, can we give them a big round of applause for their fabulous effort by all four teams? I'm going to repeat their teams: University of Kelaniya Team B and Team A, University of Sri Jayawardhanapura Team E, and the University of Colombo with Team B as well. And it's now time for our eminent panel of judges to decide on who is going to be crowned the winner of the CFA Institute Research Challenge Sri Lanka 2024 and 2025. The judges came with some very challenging questions, insightful questions. Were the questions answered well? Well, some did, some did not so well. So let's find out, and the judges may now join the SLRC committee in the room that was shown. There's a secret room at the back. They go in. I hear they're well-to-do, so you can't bribe them with money, but I hear they love their cashew nuts. So whatever is on the table, you can take them back there into that secret room, and let's see what they've got in store for us with the results. But until then, I would like to also thank the sponsors for today's proceedings. Our platinum sponsor, once again, the Colombo Stock Exchange. Gold sponsor, Deloitte Sri Lanka. Silver sponsors, Capital Alliance Limited, CT CLSA Securities, First Capital Holdings PLC, H&B Investment Bank, Lanka Pay, NDB Capital Holdings, Senfin Asset Management, Userbase Sri Lanka. Our knowledge partners: Equity Knowledge Partners, Banking Partner, Hatton National Bank PLC, Event Hospitality Partner, Cinnamon Lakeside Colombo, Soft Skills Partner, Advi Academy, Candidate Resource Partner, Alpha Business School, Print Media Partners, Daily FT, Daily Mirror, The Sunday Times, Text Messaging Partner, Textware, and our supporting partner, EduLoan. Ladies and gentlemen, our sponsors, can we give them a round of applause too? They're seated amongst you all as well. Now, we've heard so much about Windforce PLC so many times across the past 2 hours or so. So Windforce PLC is a leading renewable energy development company in Sri Lanka and has been a dominant player in Sri Lanka's wind power industry since its first project in 2010. The company was established to handle all aspects of renewable energy development and today owns, develops and operates the top-of-the-line power plants that are fully equipped to meet the growing demand for clean, green energy. Now, here's to tell you more about Windforce PLC, our subject company for this leg of the competition. Here's a video by Ms. Rusiri Kure, CFO of Windforce PLC.
Hi, my name is Rusiri Kure and I'm the Chief Financial Officer of Windforce PLC. It is a great honor for us to be chosen as the target company for the CFA Institute Research Challenge 24-25 Sri Lanka. This has been a great opportunity for us to support finance students, which is a part of our commitment to giving back to the community. Throughout the event, students have gained valuable insights into our renewable energy business model, and we have seen their enthusiasm during the Q&A session. I would also like to encourage other listed companies to participate into this event because the CFA Society of Sri Lanka has done a wonderful job by making this event enjoyable and meaningful while allowing us to contribute to the society in a positive manner. Finally, I wish the 4 teams in the final round the very best of luck. Thank you.
With that, we move on to a very special guest who has flown in for the series of events that will take place with the CFA Society Sri Lanka. I'd like to invite in front and to address you all Rezina Abdullah, Society Regional Director of the CFA Institute, to describe and tell you more about CFA and its programs. Ladies and gentlemen, Rezina Abdullah.
Good evening, everyone. I'm Rasina Abdullah. I'm the Society Relations Director for CFA Institute. I'm based in CFA Institute's Hong Kong office. It's a pleasure for me to be here all this week, spending time with CFA Society Sri Lanka and meeting with all of our important stakeholders here. First of all, let me add my big congratulations to all the teams that participated today. Well done to all of you. It was quite an exciting evening so far. I don't envy the judges for sure, and I think it's going to be a tough task for them to pick a winner tonight. I want to also take a moment to share a little bit about CFA Institute to those of you who may not be as familiar, but also address particularly our team members here who have competed today. Let me begin with a bit of an introduction of what CFA Institute is. We are a global not-for-profit organization, in fact the world's largest investment professional association, and we are comprising a very global network of members, societies, and our partnerships with key financial organizations around the world. Our mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. So that's essentially one of the ways that we're doing this is, in fact, this research challenge. This is a global competition. We do it across all of our markets almost, and the best of the best are represented here today as well. This is what we look like in terms of numbers. You'll see the spread between our members and our candidates. And I always emphasize that our candidates are really mostly based in the Asia-Pacific region where we all are sitting. And again, this is where the growth is. Now, CFA Institute is synonymous with the CFA Charter, and I think some of you have heard this term, the gold standard. That's what the Charter is regarded as, and primarily for one reason, which is the rigor of the curriculum. This is really unmatched within the financial industry, and as any charter holder will tell you, the preparation that the curriculum sets you up for is unmatched. We are now over 200,000 members around the world. And we also have recognition from various regulatory bodies around the world. Again, it shows the regard in which the Charter is held, which has granted us waivers and exemptions in many markets for local licensing. And of course, our partnership with universities, many of whom are represented today. We have over 800 affiliated universities around the world, 7 here in Sri Lanka. And what this means is that these universities have curriculum that are closely aligned to the CFA program curriculum, and it enables our candidates to be preparing for both programs at a time. When we talk about the global reach and representation of the CFA charter holders around the world, these are the top global employers currently. So as you can see, again, represented by the best in class in many in their own regards as well. And closer to home, these are the top employers here in Sri Lanka. We recognized many of them earlier this week together with the society, and I know many of you are here tonight as well, so thank you so much for your partnership, your support, and your collaboration with the CFA community here. So the benefits of employing CFA charter holders and why you see many of them in these esteemed organizations around the world. So again, I'll underscore the expertise that the CFA program infuses and brings to a candidate, the broad skills that they acquire, especially when it comes to analysis and decision making. Of course, then the trust and accountability that is infused into the curriculum. At the core of the CFA program is ethics, which ensures that our charter holders have a client-first thinking, and they hold themselves to high professional and ethical standards. And of course, the continual evolution and upgrade of the CFA program that ensures that it continues to stay relevant and ensures that we are up to date with the market as well. Now, what are the CFA program candidates' current occupations? This is just a snapshot. We did a poll of our candidates last year, and you'll see here how diverse the backgrounds are, and actually many of our charter holders themselves will tell you, many of them may not have even come from the investment profession, but here they are all holding the same passport, the global passport, which is the CFA Charter. Just to briefly introduce what the CFA program looks like in terms of the learning. So as many of you know, it's comprised of 3 levels. And you'll see here at each level the key content that is covered. So at level 1, the broad investment tools, level 2, the deep dive into the various asset classes, and level 3, portfolio construction. And again, I want to call out ethics being the core at every level in each of the learning. So how to earn the CFA charter? So at the very minimum, we start with the enrollment requirements, either a bachelor's degree or being a current university student. So I think a lot of you here already tick those boxes, or having the requisite professional work experience. So once you enroll, what does that look like after? The exam success. So this is always the question mark for many candidates. How do I actually get to the finish line? So 300 hours of study is our brand promise, and one that we still hold on to. So at every level, at the very minimum, 300 hours of study. So it's an arduous task, not easy, but well worth the achievement at the end. And exam preparations, all based around the CFA program curriculum. That's the only Bible as such to be studying. And of course, we encourage our candidates to take advantage of all the study tools that we provide, especially through our learning ecosystem. And of course, for those that are fortunate enough to have additional prep providers in the market, such as here in Sri Lanka, also take advantage of that. And on average, that whole process to reach those 3 levels and complete those 3 levels takes around 4 years. So I just want to also call out and just make a note, especially to our young aspirants, to start on that journey as soon as possible. Take the time while you're still in the university level to start that journey. Many of our partners will tell you that when you're within the school system and you're already used to studying, that's really the best time before you get into the workforce and your responsibilities increase. And also, as a powerful alternative to the MBA as well. Oftentimes, the CFA program is seen as a great leveler because there's only one charter, there's only one standard. So whether you're taking the exam here in Sri Lanka or you've tested yourself in the US or in Singapore or in Japan, it's all the same. It's the same one charter, which that cannot be compared as with a degree or MBA. And of course, the global recognition then that comes with it as well. Last but not least, the CFA program scholarships that are also available. We have 2 currently that are available. One is the Access Scholarships. So these are awarded on a needs basis. We offer these scholarships 4 times a year, tied to each exam window. And this scholarship reduces the total fee to $400 US. Also for some of our faculty members who may be in the room today, we do have role-based scholarships for professors, for example, which then reduces the program fee to $600. Okay, so with that, thank you very much. Congratulations once again to all our teams. And I also want to add my thanks to our sponsors and our partners. Thank you so much for the support. Thank you.
Thank you very much, Resina, for that quick snapshot of CFA and what's to offer. Students and potential candidates of the CFA program, there you have it. That's a rundown of what you need to do and how you can get to holding a charter from CFA. With that, we move into a speech by a special individual, our chief guest for the evening. I'd like to invite in front and address you all Senior Professor Vasantha Kumara, Vice Chairman, the University Grants Commission of Sri Lanka. Ladies and gentlemen, our chief guest for the evening.
Thank you and good evening everyone. Mr. Dilshan Veerasekara, the Chairman of Colombo Stock Exchange. Ms. Rashmi Parnavitana, the CFA Society President. Ms. Rashina Abdullah, the Regional Director of CFA Institute. Mr. Arnalis, the CEO of CFA Society. And Mr. Vijita Kanaratna, the Chairman of CFA Research College Program. The faculty, students, esteemed guests, ladies and gentlemen. So let me express this as an honor to invite me to make this speech to stand before you today. Being expertise in agriculture sector, so addressing someone in the financial, of course, background would be quite challenging. But let me share with you our experience in the UGC point of view, how we see these initiatives, especially initiative competition like this. For that, I want to highlight 3 key points in my speech today. One thing is the current challenge faced by university students in the job market, and then skills and knowledge required to meet future demands. And how initiatives like this conference can help bridge the gap, create marketable graduates. So let's discuss the current challenges in the job market. The global job market is more competitive than ever, as you know. Despite having academic qualifications, many university graduates face high unemployability rates. So according to the recent studies, we have observed a significant percentage of graduates struggle to find jobs that match their qualifications. So this situation is worse in non-STEM fields such as arts and management, where graduates, despite their comparatively more student enrollments in public and private sector higher education institutes. Then there's a question why this is happening in this part of the world. Well, there's a reason. For example, there's a skill mismatch that always happening. So many graduates lack the practical skills and industry-specific knowledge that employees seek. Theoretical knowledge alone is no longer enough. Then, lack of skills to deal with rapid technological advancements. As you know, the rise of automation, artificial intelligence, and data-driven decision-making has transformed industries. Graduates who are not equipped with these skills are left behind. That is one of the reasons. There are ethical gaps as well. So in fields like equity research and ethical lapses can have far-reaching consequences. Employees are increasingly looking for professionals who not only have technical expertise but also strong ethical foundation. That is probably you are experiencing in this field. And there is always global competition. The job market is no longer local, it's global. Students are competing with peers from around the world, making it essential to stand out with unique skills and experiences. So these challenges are daunting, but they are not impossible. With the right approach, we can turn these obstacles into opportunities. So let's see how we can equip students for future demands. To thrive in the job market, students need to be equipped with a diverse set of skills and knowledge. So there are some areas to be focused. For example, technical skills, where data analysis and research becoming important. In equity research, as you know, the ability to analyze data and interpret trends and make informed decisions is critical. So there are so many tools that you can use like Excel, Python, or financial modeling software, so many available. And then financial literacy. A deep understanding of financial markets, valuation techniques, and investment strategies are also crucial, as well as the technical proficiency, that is familiarity with emerging technologies like AI, machine learning, and blockchain can give you a competitive edge over the others. So this is one of the reasons UGC supported very recently establishing IT departments in humanities and social faculties across all the state universities to equip them with more IT-based skills and then to become competitive in the job market. And again, soft skills like critical thinking and problem solving. Because employers, they value graduates who can think critically, solve complex problems, and make data-driven decisions. And of course, the communication skills, that is the ability to present your findings clearly and persuasively. That is vital, especially in equity research. And again, the teamwork and collaboration. For the most projects require collaboration, so being able to work effectively in teams is a must in your future career works. And the teamwork and collaboration is also important because most projects require collaboration. So being able to work effectively in teams is a must, as I already mentioned. The ethical practices is again important in terms of integrity and transparency in ethical research. Ethical practices are non-negotiable. Misrepresentation of data or biased analysis can lead to severe consequences, as you know. The regulatory knowledge, that is understanding legal and regulatory frameworks governing financial markets, is essential to ensure compliance and ethical behavior. And also the lifelong learning. As you know, the world is changing rapidly, and the ability to adapt and learn continuously is crucial. Embrace a mindset of lifelong learning is to stay relevant in the field. Then the problem comes how to bridge this gap. So what's the role of initiatives like this conference or this competition? So this competition seems to be a shining example of how we can bridge the gap between academia and industry. Because this can give you hands-on mentoring by working closely with industry experts, gain practical insights that textbooks cannot provide. And there are real-world challenges. Competitions like this allow you to apply your knowledge to real-world scenarios, preparing you for the complexities of the job market. And again, the ethical training. By emphasizing ethical practices, this competition probably ensure that you not only excel in your field, but also contribute to a more transparent and trustworthy financial ecosystem. So, to the students here today, I urge you to take full advantage of this opportunity. Be curious, ask questions, and immerse yourself in the learning experience. Remember, the skills you develop here will not only help you win this competition, but also prepare you for a successful career, right? To the organizers and mentors, thank you for creating this platform. Your efforts are shaping the next generation of ethical and skilled professionals who will drive the future of equity research and beyond. So the job market may be challenging, but with the right skills, knowledge, and ethical foundation, you can rise above the competition. So let this conference be the starting point of your journey towards becoming a marketable graduate who are not only skilled but also ethical and adaptable. So congratulations everyone, thank you, and I wish you all the best in the competition and your future endeavors as well. Thank you very much.
Thank you very much, Senior Professor Vasanta Kumara, Vice Chairman of the University Grants Commission of Sri Lanka, for those words and for gracing this occasion. Next, looks like the judges have made a decision, but before we announce the winners, I would like to invite the judges to please take their space on the stage and to give their comments on the teams and their presentations. Let's see if all that cashew came into good use.
Hello everyone, thank you for being here today, and many congratulations to all 4 teams who presented today. I want to commend all 4 teams on excellent presentations. I also judged the best broker reports for the capital market awards that the CFA generally holds every year. And then I can very confidently say that most of the reports that were presented today were well in line with the kind of reports that are published by brokerages. So you are very well ahead for undergraduates. You are doing really well. That's amazing. So I'm very proud as a product of the Sri Lankan University myself. I'm from the University of Peradeniya. My first degree was from there. To see that the universities of Colombo, Sri Javadhanpura and Kelaniya made such excellent presentations. What I would have to say in overall as feedback, if I were to give the teams, is if we are to win in the sub-regional and the regional competitions, what we would need to improve is the ability to present a little bit better perhaps, and to be able to give focused answers to questions. You only have a very limited time, and then you don't have the time to dither. So some of you did very well in that regard. Some of you dithered quite a bit. You didn't give focused answers. That is something that I think is very important to improve going ahead. And in terms of the reports, what we like to see in a report is not just the industry factors or the factors very specific to the company. What we need to see or understand better, if I were an investor, what I would want to see in a report here in the presentation is how those industry factors, country factors, would translate into revenue growth and profit growth, and of course dividend growth into the company, into the investor, into that specific company, and then onto the investor. So if you are coming out with that story, I think that is the primary thing that we are looking at. So thank you very much again for excellent presentations from the teams, and it was a very pleasant evening for all of us. Thank you again for all teams. Thank you for being here to the rest of you as well. Thank you.
So again, just to reiterate what Bhudika said, congratulations. I know it's been a very limited time to go through all this new information and methodologies and everything, so job well done. So to add to the feedback, what I'd like to also say is just as much as sectors were looked at, countries, the diversification is because the returns and the risks are different. So I know there might be restrictions in terms of data, but even to a certain part, if you could look at it in terms of separate silos, which I think some teams looked at industry growth, but a bit more detail there. And maybe in terms of profits and revenues breakdowns, how they change, that will help you see where profits are expanding, where profits are squeezing, which countries, and so forth. And just one more specific thing, just on line items, and I think electricity, it was elaborated, but on the electric vehicles, if you could just go into more elaboration of what drives it, how it drives it, just to give a bit more perspective or assumptions underlying in those key line items, then there's a story that you pick up. And that's where you really need to sell that story in terms of to sell that company as well. But overall, I think it was good. I think there's been a bit of tight competition between some of the teams as well. So good luck.
All right. So good evening, everyone. I have to make a confession first. I'm not a CFA, so this is all very new to me as well. I do spend my time as an investor, so I listen to pitches like this all the time, and that's what I do for a living. So my bar for listening to these is quite high, and I'm always thinking to myself, am I going to invest in this company? I have to say, I didn't recalibrate today to think about you all as students, so I really have to congratulate you all for really preparing and coming out here and doing a phenomenal job, because honestly, I had difficulty at times, trying to say, hey, you know what, don't expect amazing answers and don't ask really, very difficult questions, but even asking difficult questions, there were some amazing answers coming back. So, really well done on preparing and taking on this kind of intimidating task of standing up here in front of all of these people and doing this, so really well done. I started off by saying I'm not a CFA, so what I look for when I think about or hear investment pitches, I really want to have incredible clarity on why I should get excited about this stock, and some of you all in your presentations really sort of came out with a couple of very, very clear points. But even in that, I like to see something that's a little bit unusual, that sort of digs a little bit below the surface. So for example, in this company, you said, this is the dominant player, great. Market's growing massively, great, so the dominant player in a massively growing market should do well. But what is it that really then enables them to do even that much better, going to a next layer of detail on that, or going to things that maybe are not so much in the specifics of the company, but in things that create alignment with investors. So for example, here, two things I didn't hear enough about, perhaps I would have liked to hear about, is the shareholders of this company, right? Who are the shareholders of this company, and how does that drive alignment with the outcome of this stock outperforming? And I think there's some insights in that. The other thing was, in the Sri Lankan environment, we're always looking for things that are dollar hedges and things that give us exposure to non-LKR denominated revenues. And a lot of you all started off with the 60-40 split, but then didn't really hammer down the point of saying, hey, look, this is a great company from a rupee hedge perspective, which as if I was investing in the stock market here, that would be a big feature for me. So again, I think great job on the valuations, great job on covering a lot of the specifics, really high quality presentations. I really like that some of the teams really had great team participation. Everybody really got involved in the presentation, but also the Q&A. And for the teams that progress forward, I would really sort of make sure that you have that as something where even in the Q&A, every single person is participating. But please give yourselves a big round of applause for a job well done.
Thank you very much to all three of the judges. I'd like to have them on stage and to invite Vijit Karunaratna, CFA, Chair, Research Challenge Committee of the CFA Society of Sri Lanka, alongside Inicia Pereira, CFA, Co-Chair, Research Challenge Committee of the Society, and Sulakshana Hettiarachchi, CFA, Research Challenge Committee of the CFA Society, to present the three of the judges with the tokens of appreciation. Can we have everyone joining in for a group photograph, and a big round of applause, ladies and gentlemen, our judges and the three individuals from the committee doing the hard work behind the stage. Next, I would like to invite Rashmi P. Risparnavithana, CFA, President CFA Society Sri Lanka, alongside Rasanja Pereira, CFA, Vice President, CFA Society Sri Lanka, to present our chief guest and our guest of honor with their tokens of appreciation. I would like to invite our chief guest for the evening, Senior Professor K.L. Vasantha Kumara, Vice Chairman, University Grants Commission of Sri Lanka, to receive a token of appreciation from the Society. Round of applause, ladies and gentlemen, Senior Professor Vasantha Kumara. And our guest of honor for tonight's proceedings, Dilshan Veerasekara, Chairman, Colombo Stock Exchange. Our first award for the evening is the Best Written Report, awarded to the team that scored the highest marks in the first round of competition. To present this award, I would like to invite Manjula Pereira, Managing Director of Windforce PLC, the subject company that received a lot of praise and a lot of critique, alongside Buddhika Fernando, CFA, Head of the Research Challenge Report Grading Panel and Judge of today's competition, and Rezina Abdullah, Regional Director, CFA Institute. On behalf of Windforce PLC, can we have Rusiri Kure, CFO of the company, in front, please? Any guesses of the winner of this award, the Best Written Report? Participants, groups, friends of participants, any guesses? Anyone who wants to take this? All right, ladies and gentlemen, put your hands together. University of Kalania, Team B. Big round of applause, ladies and gentlemen, University of Kalania, Team B. I would now like to invite the following members from the Society to present the internship letters from our internship partners. To present the letters, I'd like to invite Travis Gomez, CFA, Director and Chair of the Candidate Outreach Initiative of the CFA Society of Sri Lanka, alongside Inisha Pereira, CFA, Research Challenge Co-Chair of the CFA Society of Sri Lanka, and Sulakshana Hettiarachi, CFA, Research Challenge Committee Member of the Society. We request the team leaders of all four teams to accept the letters on behalf of their teams, and these are presented by our internship partners, Equity Knowledge Partners, Capital Alliance Limited, CSE, the Colombo Stock Exchange, First Capital Holdings PLC, John Keel's Stockbrokers, KPMG, Sunshine Holdings, and Userbase. Presented to the four teams reaching the finals, University of Colombo, Team A, University of Kalania, Team A, and Team B of the University of Kalania, and Team E of the University of Sri Jayawardhanapura. That's Travis Gomez, CFA, Inisha Pereira, CFA, and Sulakshana Hettiarachi, CFA, all from the CFA Society Sri Lanka. A big round of applause to the presentation party as well. We get into our runner-up team announcement. Now this team will walk away with a cash prize worth 125,000 rupees, a trophy of course, candidate council membership offer. Members from the runners-up team who intend to register for the CFA program within the calendar year of 2025 are eligible for a free membership of the Candidate Council of CFA Society Sri Lanka and a 20% discount on CFA program level 1 tuition fees at prevalent rates from Alpha Business School to all members of the runners-up team. and to register during the calendar year of 2025. So all these only if you register in 2025, right? To do the honors and present the award, I'd like to invite Rajiva Bandaranaike, CEO, Colombo Stock Exchange, alongside Rasanja Pereira, CFA, Vice President, CFA Society Sri Lanka, and Aruna Alves, CEO, CFA Society Sri Lanka. From the Colombo Stock Exchange, I'd like to invite Vindhya Jayasekara, CFO and CEO designate, to join Rasanja Pereira and Aruna Alves on stage, please. I'm going to ask the audience, any takers? Anyone who believes any team second runner-up? And the runners-up for the CFA Institute Research Challenge Sri Lanka 2024-2025. Ladies and gentlemen, put your hands together. Certainly the best dressed team, University of Kelaniya Team B. Congratulations, the runners-up of the challenge in Sri Lanka. Congratulations to Ravindu Abekon, Netuni Pereira, Yasas Malavarachi, Netmi Atukorala, and Sachinta Rajapaksa. Walk away with a 20% scholarship from Alpha Business School. And to join them on stage, I'd like to invite the faculty advisor of Team B from the University of Kelaniya, Netmi Herat, CFA, and the industry mentor for Team B of University of Kelaniya, Chatun Hayantudua, CFA. Congratulations, ladies and gentlemen, runners-up of the CFA Society Research Challenge, University of Kelaniya Team B. Thank you very much to all dignitaries presenting the award as well. For the winning team, we move on. They will walk away with a cash prize worth 200,000 rupees, the coveted trophy, additional internships from our platinum sponsor, Colombo Stock Exchange, candidate council membership offers, and members from the winning team who intend to register for the CFA program within this year are eligible for free membership of the candidate council of the CFA Society of Sri Lanka, and a 40% discount from Alpha Business School on CFA program level 1 tuition fees to all members of the winning team. To present this set of awards, I'd like to invite in front and on stage our chief guest, Senior Professor K.L. Vasantakumara, Vice Chairman, the UGC of Sri Lanka, alongside Dilshan Veerasekara, Chairman, Colombo Stock Exchange, Rashmi Piris Parnavithana, CFA, President, CFA Society Sri Lanka, and Rezina Abdullah, Regional Director, CFA Institute. The winning team for the CFA Institute Research Challenge Sri Lanka. Will it be Sri Jayawardhanapura, Colombo, or Kelaniya? Now I'm getting a lot of screen time because I see everyone recording, so I'm going to keep the suspense. It's safe to say that we will only have to go one direction to see the winners of tonight. Ladies and gentlemen, Team A of the University of Kelaniya. Congratulations to Team A, University of Kelaniya, for bagging tonight's coveted trophy for the winners of the CFA Society Sri Lanka Challenge of 2024-25. Middle for a nice photograph together. Definitely a proud moment for the University of Kelaniya. That's Salama Sanun, Kings Karen, Leonie Hapuarachi, Chitmi Gamage and Nifal Munhim. Can I have the faculty advisor of the University of Kelaniya team A. Sandali Sudhasinger joining the team in front, please. Joining the team, can we have the industry mentor, Usama Chifri, CFA, for his token of appreciation and recognition as the industry mentor of the winning team. Congratulations, University of Kelaniya Team A, for bagging the coveted award and winning the research challenge for this year. Now keep in mind that the winners of tonight's challenge will present and participate in the sub-regional round of the Global Research Challenge, like the speakers and the CFA members spoke to you about it before. This is a global research challenge and the winners of Sri Lanka will go on and present at the sub-regional rounds of this competition. Now, given the fact that we have 4 solid teams, right? Don't you all agree that they all did a great job regardless? Yep, can we give them all a big round of applause? I think they all did a fabulous job. I think I overheard the messenger who came with the results saying the judges deliberated a lot. It was a close fight. They couldn't decide, but they finally had to narrow it down because they couldn't award 4. But there is a small suspense element here. There's a twist, a plot twist that I would like to disclose at this point. Usually, the winner gets to present at the sub-regional rounds. Now, given the higher number of teams that participated in this year's competition, this year, 2 teams will qualify to participate in the sub-regional round for the very first time. So congratulations to the winners and the runners-up of this event. A round of applause to both teams, Team A and B from the University of Kelaniya, who will be presenting and participating in the sub-regional rounds for the very first time in Sri Lanka's history with the CFA Research Challenge. So kudos to all of you and kudos to the teams from the University of Jayawardhanapura and the University of Colombo for a great effort at this year's challenge. Next, I would like to invite a very special person on behalf of a very special team who had worked very tirelessly to make tonight's proceedings a very successful affair. I'd like to invite in front Vijit Karunaratna, CFA Chairperson Research Challenge Committee from the CFA Society Sri Lanka, to propose the vote of thanks. A big round of applause, ladies and gentlemen, the chairperson behind tonight's research challenge and everything that was.
Good evening everyone and thank you. I don't want to waste more time, but unfortunately we have to be very grateful for almost everyone who helped us during this journey. It started a long way and it ran for several months, and the end result you have seen today, which is quite exciting. Definitely it was a clash of the titans. So on behalf of the CFA Society Sri Lanka, I am truly honored to extend my heartfelt gratitude to everyone who made a part in making this event a success over the course of past several months. First and foremost, I sincerely thank you for our esteemed chief guest, Senior Professor K.L. Vasantakumar. Thank you, sir, for making the time from your busy schedule. We know you're quite busy, but thank you for gracing this event and speaking to the universities and the students who are present today. And also, I know our guest of honor just walked out from another busy day. He came here, Dilshan Veerasekara, who's not an alien to this CAC chair, for adding color to our event. I sincerely appreciate and extend all the invitees we invited from, which include all the participating universities, all our sponsors, all the internship partners who extended their gratitude in terms of providing internship opportunities to the finalists, and also our top 20 employers. To all the participating teams, you are our backbone. Because of you, each day, all of us get together each year and do this event, because we want the next generation of finance professionals to be more sharper than us, right? So that's the end outcome that we are looking. This year we had a record number of 33 teams signing up for the event, and it was fabulous. Yes, it's always a daunting task to see a lot of teams coming in, but it's always nice to have a lot of teams participating. And for the finalists, for drilling it down to the nail. You gave your fullest effort on the day. Once again, may I ask all the ones who are in the audience to give them a round of applause again, because you are seeing their talent here for 20 minutes. We have seen them for the last several months. And a huge shout out to all our industry mentors who are CFA charter holders, and also the generous graders headed by Buddhika, the panel of graders. They shortlisted basically the report round, so their input and their effort, and they volunteered with their time and expertise to make this a success. And also, we have to give a shout out to our university outreach team as well. This year we had 10 universities participating, and we plan on increasing that more and more. Also we have to extend our thank you for the target company, Winforce PLC. They devoted their time, and I have been bugging them for a lot, and they have never said no. Unfortunately, our CEO is not here today, Mr. Manjulu Pereira, but we extend the thanks to all the team members, the senior team members of Winforce PLC for their dedication and commitment for this course. Once again, I'd like to thank you again, our sponsors. I would not read out the whole list, but thank you again, without whom we would not be able to do this event in this scale. And we hope that you will extend that same level of cooperation next year as well. A heartfelt thank you to all the final panel of judges. Hiran, Buddhika, Dinali, thanks a lot. I called you all up, and none of you all said no. Right, even though for Hiran it was a totally alien thing to do, but thank you for signing up, and the time and the guidance given by you all on stage was phenomenal, and we value that a lot as the committee. We also like to extend our thanks to the CFA Institute, and definitely for Rosina for flying down from Hong Kong itself and gracing our event on behalf of the CFA Society Sri Lanka. So, and definitely without the CFA Institute and also CFA Society Sri Lanka, we won't be able to do this. And their support have been one of the forces that have been driving us to this extent. And then obviously our platinum sponsor, CSC, unfortunately, currently sitting CEO, Mr. Rajiv, is not here to grace the event, but thank you, Vindhya, for filling that in, CEO designate of this CSC. And also Niroshan was here, and thank you for giving us all the support as the platinum sponsor from the kickoff point of time, from the kickoff itself. CSC has been guiding us and helping us throughout this journey, and we feel that they will continue that support again. And for our event management team, Kairos, Jordan, thanks a lot for all the support from behind the curtains. And final shout out to our fabulous team, the SLRC committee, without whom we won't be able to do. I have to unfortunately call out the names, taking a bit of time. So Aruna, Sandunika, Ju, Enisha, and Sulakshana, thanks a lot. And I can't forget the guidance that we have got from our CFA Society board. Thank you so much for being there, supporting us throughout this journey. Whenever a challenge is there, the board has been helping us to overcome them and make this event a success. So for all the teams who have participated, the advice that I can give as a former winner of the CFA Research Challenge, which was lifetime ago, you have already won. All the 4 teams have already won. You have gained a lot, and it is a brilliant moment that we can see 2 teams representing Sri Lanka. That's a massive achievement, and we really love to see some of y'all jumping those challenges and achieving, going through the sub-regional and regional, and finally the dream of participating in the global event, raising the Sri Lankan flag. So thank you again everyone for being here in this event and gracing this event. I wish you all a pleasant evening. Thank you.
Thank you very much, Vijit. Whilst we congratulate all 4 finalists, I'd like to also take this moment to thank and congratulate all participants of this leg of the CFA Research Challenge. Sincere appreciation goes to all participating teams, winning teams, for the reports, for the presentations, and every stakeholder involved in making this research challenge a successfully insightful and great learning journey. So kudos to everyone, from sponsors, internship partners, judges, faculty advisors, industry mentors, and participants. Kudos to all of you. Congratulations. Can we give yourselves a big round of applause? So thank you very much for joining this year's round of the challenge. I would like to invite all of you to join in the refreshments and the celebratory food and drinks round, courtesy CFA Society, that is over at the back. Whilst that is happening, I would like to invite the following individuals to the stage for a group photograph. Our chief guest for the night, Senior Professor K.L. Vasantakumara, Vice Chairman UGC of Sri Lanka, alongside Rashmi Piris Paranavitarana, CFA President, CFA Society Sri Lanka, Rezina Abdullah, Regional Director, CFA Institute, Razancha Pereira, CFA, Vice President, CFA Society Sri Lanka, alongside Vindhya Jayasekara, CFA, CEO Designate of the Colombo Stock Exchange, Aruna Alves, alongside the Sri Lanka Research Challenge Committee. That's Vijit Karunaratna, Inisha, Sulakshana, Sandunika, and Juanita, all of you to join on stage for a group photograph, please. Can we also have the winners and the runner-up team to join in this final photograph, whilst the rest of the audience will proceed and start off the food and drinks. University of Kelaniya, Team A and Team B. Congratulations everyone, and thank you for being a fantastic audience. Good night. Take care.